What is going on, you guys, and welcome back to another video on the channel. If it is your first time here, my name is Brandon, and in this video, we're going to be going over three of my top stock picks at the moment. Three stocks that I believe are offering a good opportunity to buy, a good chance to go out and add these three names to your portfolio. And I will include timestamps down below. If you're someone that just wants the picks and just get out of here, one of those people that just wants to just get the picks and go, feel free to do that. If you are a subscriber that is curious about our 3 stocks to buy series, our monthly series that we do on the channel, as well as the weekly reviews, because I have got a decent amount of questions on that. Where have they been? Where have they been? Stick around to the end of the video because I do have a little something to say about that a note to our subscribers. That'll be at the end of the video. It'll be quick. But I'll actually start with addressing the question, do I think now is a good time to buy stocks? Very common question that we're getting these days with the markets up at all-time highs. I do tend to stay pretty firm on this, and I'm pretty consistent in the way that I approach the stock market and buying stocks. Is it the best time to buy? Absolutely not. We've seen better times and better opportunities out there. That said, that's not a reason for me to go out and not invest in the stock market. I'm not out here and trying to time the market and essentially jump in and out when a dip comes, this or that. I believe that one of the best approaches we can do is just to stay invested. You guys know that. And yes, we are at all-time highs. You could have said the same thing a matter of months ago. You could have said the same thing a year ago, 2 years ago, 3 years ago, which people have. And if you're one of those people that was essentially trying to jump in and out at the peaks and the valleys, you probably did a whole lot worse than somebody who over the past 3, 4, 5 years have just continued to add money to their portfolio, to continue buying dips and buying opportunities on good, strong companies when they come up. That's basically the way that I tackle the stock market, and that's the way that I continue to tackle it. And in today's video, we're going to be showcasing 3 stocks that I believe, although the broader market may be at all-time highs, 3 stocks that I believe are still offering some good value, because we need to keep in mind we have no idea how long this market will continue pushing up, how much more growth we have in us, and especially for a young investor like myself, a 24-year-old, I don't even care if the stock market drops. If we enter into a recession and stocks come down, I actually want that so I can go out and purchase more stocks. So that's just my approach on it. Take it with a grain of salt. But let's dive on into our first stock for today's video. It's probably my favorite of the bunch. It is the company QSR.to. The name of this company is actually Restaurant Brands International. And if you're not familiar with Restaurant Brands International, you will be familiar with Burger King, Popeyes, Louisiana Chicken, as well as Timmy Ho's, okay? Tim Hortons over here in Canada. In fact, Restaurant Brands is the parent company of these 3 branches or these 3 franchises, and it's actually the 3rd largest fast food chain in the world. So we have McDonald's up being number 1. Following that, we have Yum Brands, company Yum Brands, KFC, etc. And coming in 3rd in terms of size, we have Restaurant Brands International. And to highlight, I mean, we're not going to get too into the numbers here. We're going to try and keep this more top level analysis for this video, but they did have a pretty nice quarter. Strong growth across the board, sales up 10% in the quarter, 8% over the year. Popeyes Louisiana Chicken had a really, really fantastic quarter with same store sales up 42%. And a big cause of this was the chicken sandwich that they're talking about, that was released, I should say. 42% growth is a very, very strong number to boast there. The downside to this company has been Tim Hortons. And Tim Hortons has been it has been the weaker unit of the 3. I know for a fact, it's not my preferred area. It's not my preferred restaurant of choice. I only really get it when I need it. And if it's close by, they've definitely been struggling, but there's also an opportunity for them to kind of turn that around. And if they're able to kind of turn that around, which is still up for grabs, I think that would be a very positive note for Restaurant Brands. That kind of goes without saying. Another big bright spot with Restaurant Brands is the fact that there is a lot of chance for international and global expansion. In particular, areas such as Asia, Europe, and the Middle East. Burger King, Popeyes, and even Tim Hortons, actually, believe it or not, when I was in the Philippines a couple months back, I randomly saw Tim Hortons there, which was one of the most random things that I I came across. I was just like, what the heck is this doing here? Regardless, a lot of opportunity to go into these growing, expanding markets, which does leave the door open for a pretty nice future for the growth of this company. Awesome at generating cash flow. And with Restaurant Brands, you are pulling in a 3% dividend, actually a plus 3%. I believe today it's sitting at about 3.11%, which is an awesome yield, as well as there's a lot of potential for this dividend to grow. So Restaurant Brands is the first stock that I think is a good buy at the moment. The ticker again is QSR, and it does trade on the Canadian market, QSR.TO. Moving along into stock number 2, which, by the way, if I didn't mention already, I'm not sure if I've mentioned it in the first segment, but both of these stocks, QSR and stock number 2, my girlfriend actually did go out and buy for her first 2 companies in her TFSA. She recently started investing with Questrade, and this was her play on China. Stock number 2 is a bit more of an aggressive one, but it is the company Baidu, ticker BIDU. This is a company that it'll often draw the comparison to Google, and if I pop up on the screen here why, you'll probably get a pretty good idea why they get that comparison. They are a massive search engine out of China. And for those of you that know, Google has a very limited, they're blocked out of China. So this company actually dominates about 60 to 80% of China's search engine volume, the market share there, the search engine market share. It kind of fluctuates up between that range. So a very powerful grasp on that market. A lot of opportunity there for monetizing advertising dollars. At the same time, this is a massive company in terms of artificial intelligence. So AI, they're involved in like the self-driving car space, which I know a lot of people have an interest in. I think it's fair to draw the comparison to Google, but at the same time, I do want us to kind of separate that, although they're in a similar business, this company isn't really as widespread. They aren't as developed as Google, because Google here is one of the most powerful companies in terms of reach, in terms of the different services they offer. But think of this as kind of like Google's little brother over in Asia. This company actually falls into the BAT stocks category. So BAT, kind of like the FANG stocks over in China. FANG here being Facebook, Alphabet, Amazon, Netflix, and Google. Over in Asia, we have BAT. Baidu, Alibaba, and Tencent. And if you are familiar with those other 2 names, you know the tier of company we're talking about here. Very strong internet presence, very strong reach on the consumer, really kind of in a tier of its own when we talk over in Asian stocks. That said, taking a look at the share price, it's been a kind of a rough go at it. Stock is down about 50% off of its highs, has picked up a little bit off of these lows. I still believe there is more room to recover and run from here. You'll notice right off the bat that the company does not pay a dividend. This is a growth stock. And of course, being tied over to Asia, we have the ongoing talk of trade wars to factor in. The coronavirus is something that, as we speak now, providing a little bit of weakness there. It may be something that we can take advantage of to actually go pick up some shares on the broader weakness. But this company, I think, is actually, again, you got to have the right risk for this one. You got to have the right risk reward trade-off because I don't have as much certainty with this one. But if you are looking to take, I guess, a high flyer on a growth stock, this could be a really good option. Reading here, the company actually is sitting on a cash pile of over $100 billion CNY, Chinese yuan, so the Chinese currency, which gives them ample powder to invest in new technologies, particular with mergers and acquisitions. It'll definitely help them weather storms if they do continue to see, or if we do see some slowdown, like some global slowdown. That's a really nice pile of cash to be sitting on. In fact, taking a look at the actual 3-year growth trend, we see that from 2016, this is their cash and short-term investments, 89 billion, 118 billion, and then 140 billion, currently sitting right up in that 130, 140 billion range, which is a really nice positive. Good company at generating cash flow. Again, you're not pulling in a dividend with this guy, but if you are looking for a stock to play the Asian market, you guys know how much I love Tencent. That was really my pick of the past little while, which has started to really pick up. But here's another opportunity that I think still has some room to grow. There's still a lot on the table that it has to make up. So if you are looking for a growth stock, Baidu could be the second one, could be a stock to look into. And it is the second stock that we'll be talking about in today's video. Moving on to our third and final stock that I believe is a good stock to buy at the moment. Definitely the most controversial of the bunch, and that is completely fine by me. If you have your own opinion on that, that's That's all you. This is just my opinion here. But our third stock is the company OVV. The company name is Ovintiv. And if you're not familiar with this company, I don't blame you whatsoever because it is relatively new, just a matter of weeks ago, maybe a month ago now. This is the company that was formerly known as Encana, and they recently underwent a structure change, a name change, actually relocated their headquarters, which we'll talk about in just a second. But right off the bat, as for the performance of this company, it has really not been a pretty picture. Looking at the past couple decades, a long downwards trend, very strong decline, really closely tied to the sector. This is, of course, an oil producer, an energy company. They were formerly based out of Alberta, I believe it was. Calgary. Yep, Alberta, Calgary. Very tough space to be in. In fact, one of the main reasons for the company shifting headquarters was that there has just been such a negative light, such a poor sentiment, such a poor vibe towards the Canadian oil market that they actually decided to relocate, kind of start this company fresh, get out of the Canadian market. Well, they still do business in Canada, but they're actually now headquartered in Denver. So a very interesting shift there. But when we do look back on this chart, although it is a new company, Ovintiv, a new company name, this data that we're looking back on is from Encana. And at these levels, I do think that this is a stock that is actually severely undervalued. I believe that the energy sector is one of the more attractive places to invest at the moment. It's not easy to invest in this sector, first of all, because it's extremely volatile. You're going to see some pretty heavy swings in a lot of energy companies across the board, but especially because this stock just continues to go down and down and down. And I even take my own personal experience. I've purchased shares of Encana about a month or so ago when it was still Encana. I'm down about 20-something% on my shares, which really sucks to look at. It's not fun buying into these companies. But that said, if we are able to extend out 10 years from now, I do believe that the oil and energy sector is still going to be a very important part of our lives. I know you get people that argue against that. I just don't see that being the case. I do personally believe we will still have a need for oils, for natural gases, and a company like this can still end up doing just fine. At these levels, we're looking at a forward PE of about 4, about 5, depending on which source you look at. Dividend yield is actually up to 2.35%. When you do look at the balance sheets, you do look at the actual operations of this company, they're actually still functioning very well. Okay, they've been raising their dividend. The company themselves is functioning well. It's just been such downward pressure on energy, such downward pressure on oil that the stock is clearly underperformed. If we are able to look out 10 years from now and assume there is going to be a rebound here, we want to buy these stocks, we want to buy these shares for as low of a price as possible. And as much as it sucks, as much as really it sucks, I look at my portfolio, 95% of my positions are in the green from holding them a while. They've been doing really well. I've made some nice gains on them. And you see this stock that's down 25%. It sucks, but if we can kind of strip out the emotion and think about it logically, the lower and lower the stock price goes, the more attractive price, the more attractive entry point we're getting. And I do have a belief that the energy sector will make a rebound. So with all that said, I'm completely happy buying into this stock. I'm actually considering very heavily going in and buying some more to even bring down my cost on these shares of Ovintiv. I may have said Ovintis a couple times because this is still a new name to me. But overall, this is my choice, my play on getting exposure into the natural gases space, getting exposure into the energy fields. I can tell you right off the bat that this is not a stock for those who don't like volatility, who aren't willing to wait it out over a multi-year period, because that is really how long it may take. That said, I think that the asset is just dropped too low to the point where it is offering actually a nice buying point. The asset is undervalued, and for that simple reason, Ovintiv is my third stock that I currently think is a good buy right now. Again, you are pulling in the 2.35% dividend. So guys, those are 3 stocks that I am personally liking at the moment. 2 stocks that my girlfriend has actually gone out and purchased for her own personal portfolio. Ovintiv being one that I bought a month ago, and I'm looking to actually go out and add more, if that gives any credibility to these picks. As always, leave an opinion down below. Do you like my stock picks? Do you dislike my stock picks? If you dislike them, give me a reason why. I'd love to hear your opinions, because this is really just my thoughts, right? This is just my research. These are stocks that I believe are fitting well in my portfolio with my overall balance. That doesn't mean that they're the right stock for you, but I'm just trying to bring attention to 3 stocks that I'm currently liking at the moment. So as always do your own research, always do your own due diligence to find out whether these stocks are appropriate for you. If you enjoyed the video and you found it helpful, if you found it informative, feel free to drop a quick thumbs up, because that is an awesome way of just supporting the channel. Turn that little gray button blue. I heard somebody say that the other day. So turn that little gray button blue. Great way of supporting the channel, and subscribe for more content. If this is your first time here, we also have our Investing Academy. If you are a beginner, especially a Canadian beginner who doesn't even have their stuff set up, or you really want to get some guidance in learning about investing, getting your portfolio set up and getting your strategy set, click the first link down below to learn more about our Investing Academy. You can learn about becoming one of our students, and we take you through the entire process of learning and getting everything set up. It's a really, really smooth process. To finish off this video, I almost forgot. I did want to just say a very quick note on our 3 stocks to buy series and our weekly review. So if you're someone that stuck around and you're a subscriber of the channel, you will have noticed that in the new year, we've stopped posting these videos. And I just wanted to be really honest with you guys and just kind of give, just kind of let you in on my mindset right now. I decided for 2020 to kind of hold back on those videos, at least for a little bit, to take a break, simply due to the fact that I started feeling like those recurring videos, they started to feel like it started to feel like I was working a job, and I was kind of tied and obliged to go out and do them. And the passion for making a video, it started to kind of dwindle away. Like this video, I came out here because I actually wanted to share 3 stocks with you. Because they're just 3 stocks that I researched, and I really enjoyed filming this video. I'm going to have a good time editing it because I want to. When I had those deadlines set for every month or every week for the weekly reviews, it started to feel like a job. This is a simple way of putting it. And when I had these deadlines on when I had to do things, instead of looking forward to something, I actually started to kind of dread them and say, oh, I got to do my research, this and that. And that's something that I really am trying to avoid here on the channel. I love creating videos. I love making content for you guys. But in order to not like burn out and just kind of get sick of all this stuff, I decided to take a little break because of the editing process, because of the research does take a lot of time. Just for now, taking a step back with those, I'm actually in the market for looking for a full-time editor, looking for someone that can help me out to offload some of that work, which would then be a completely different story if I could have somebody helping out with the videos. But, I want to do YouTube for as long as this platform allows me to. And in order for me to be sustainable on it, and in order for me to continue doing this on a pretty good path, I felt that a little break was necessary. That's just a quick update on why you haven't been seeing those videos. Again, I do have plans to re-spark those up down the road. Just trying to get a little more help that I can offload the editing, because those videos do take a lot of time. And yeah, that's really just the rundown of what's going on. If you stuck around to this part of the video, I appreciate you. I appreciate your support. I appreciate all the subscribers and all the viewers. Thank you for hearing me out. I hope you guys enjoyed the stock picks. And as always, I thank you guys for watching. I hope you enjoyed, and I'll see you in the next video.